Hi everyone, just checking you can hear me and see my screen's okay. Awesome. Thank you, Peter. Thank you, Gordon. Right, let's get going. Yeah, sorry I'm a bit late today. I had a media commitment, so that's all done, and I'm now back in the game, which is good. And right, so yeah, these markets are looking a little bit on as though that they're sort of a bit of a turning point, really. Possibly, and I think that's and I know the word possibly doesn't overly help us here. Right, where am I? No. Where am I looking there? Yeah, you look at the dollar, for example. The dollar has been increasingly, I think, sort of thrown around by this trade dispute in recent days, and it's interesting that we had that announcement yesterday from the White House that they were sort of looking to invite China. Interesting that comes a day after China have gone to the WTO and requested sanctions against the US. So that's interesting. But yeah, I think that what we're seeing is a move towards. We're within 2 months now of the midterms in the US, and I think what Donald Trump's going to want to have is some sort of culmination, be it sort of the position where he looks like he's the big strong man who basically goes all in on China, or he actually gets an agreement from China and he gets an agreement from China, and he comes to the electorate and seems to be victorious. So I think he probably is going to be manoeuvring himself or the White House towards some sort of culmination at some stage in the next sort of few weeks. Could be that this is the sort of first movement of that, but yeah, I think it is interesting. But I think ultimately within that, what you've got is this dollar, which I've been talking about the fact that it seems to be losing impetus throughout this run higher since the April rally really kicked off. Every time we see the uptrend broken, it sort of gets less and less strong. I suppose with the one exception of that August rally, the market has just been falling over, seemingly failing to really sort of continue the run higher, and it sort of looks like it's building some sort of a top pattern. And I've been thinking that is sort of pretty much positioning us, I think, probably for maybe November, maybe October, where we do see sort of the market rolling over decisively, and maybe the dollar rally sort of starts to reverse again. I think for now we're mixed on the dollar, and I think you can't necessarily go too far in one direction within that. I think that needs to be the case with the dollar. And you look at the sort of the likes of euro dollar basing out. I think that is interesting. Possibly basing out there on euro dollar, increasingly neutral on euro dollar. You've got sterling dollar, which is sort of testing a downtrend, looking to sort of start to improve again. Look at gold picking up yesterday, breaking a little bit of a sort of negative phase, starting to sort of form higher lows, starting to pick up. Momentum indicators on all these instruments I'm looking at, seemingly more positive. I'm going to just show you the dollar index on my technicals, because I don't often show you that. And I think again this shows here the MACD lines, MACD lines, rolling over, negative divergence on the RSI and MACD lines. But look at these MACD lines now turning lower, or sort of failing to really gain traction now around that neutral point. So as the market just starts to roll over, look at the 21-day moving average, just rolling over. Obviously that 89-day moving average is a bit of an important near term, but it's interesting that the market is seemingly sort of losing a bit of traction. Is that a head and shoulders forming on the dollar chart from Gordon? Yeah, I would say that would be the risk, and I've put the neckline in at 94. So a move below 94 figure, I think, would be a sort of a breakdown of that. You'd confirm that on a move below that 93.71 mark of the July low. But yeah, this is sort of, I think it's not necessarily going to come anytime soon. I think we're going to get continued sort of toing and froing from the US-China dispute, but I think this is in the process of topping out. I'm not saying it's going to form a perfect head and shoulders reversal. It's doesn't look head and shoulders top. I don't think it necessarily will, but I think this is in the process of the sort of dollar losing traction and sort of rolling over. So yeah, and I was sort of saying about gold, and similar sort of story. We've seen this sort of selling pressure coming through. It culminated really in that big, strong sell-off, big momentum-driven sell-off in gold through July and August. But then we've seen the recovery. We've seen the recovery from that 1160 level, forming a higher low at 1183, if gold can now push above 1214, that would leave 1187 as another sort of higher low positioning. And you've got the momentum indicators which are turning the corner. You've got the stochastics picking up, MACD lines picking up again, RSI sort of holding above 40, moving above 50. When was the last time we saw that? Well, at the moment, if it closed at 51, that hasn't been seen since the April sell-off really started to go. So I think that this is an interesting sort of development that we've got in these markets. Now, if you look at equity markets, I spoke late last week and early this week about the fact that I sort of saw that the DAX was starting to turn a corner, looking a little bit stretched. It seems as though it's starting to get a little bit of that momentum behind the recovery. RSI is picking up nicely above 30 now. MACD lines starting to sort of bottom out again. Stochastics on the brink of a confirmed crossover buy signal. Now, the key to the DAX is this resistance at 12,100, let's say 12,100 to 12,120. It's basically at that now. What was today's high? 12,106. So it's into this band of resistance from these June and August lows. And if it can close above that, I think that really does open the upside. And I think it opens it towards 12,400 in this recovery. And what you do tend to see is when the DAX does sort of gain momentum recovery, it's pretty good. It is pretty good. A little bit choppy, you could argue, in this move, but this move here, we saw some decent gains of 12.1 to 12.6. That's 500 pips, 500 ticks, and that was over the course of a couple of weeks. So there is quite a decent rally, decent sort of sell-off to unwind, and already we're starting to see the momentum behind that. Now, Brexit is sort of a real argument behind FTSE 100 and FTSE 100 and sterling move. And what we are seeing is this negative correlation still between sterling and FTSE 100. So we've seen sterling just picking up on the positive Brexit headlines. FTSE 100 struggling. Come on, chart. FTSE 100 struggling. FTSE 100 struggling. Come on. Oh, you scumbag. Okay, so let's try that again. No? Don't want to help me out? No, fine. Okay, thank you so much. Okay, so yeah, FTSE 100 is struggling. And generally what you do tend to see is... Yes, very good, Gordon. Thank you so much. What you do tend to see is when sterling does well, FTSE does badly. And we've played that one out for months, really. I think it's going to be a feature of the fact that if you do get a positive outcome from Brexit in the coming months, I think that you're going to see sterling higher. You're looking at, well, where are we at the moment? 130 on sterling. You could easily see 135, easily 135, I think. And you'd likely to see Brexit, that FTSE 100 underperform on the back of that. So, where are we at? Gold performance improving, US stretched, really snapping back. Yeah, and generally today we need to be looking out for Bank of England and ECB. Those are two factors that are going to impact on the markets. Just very quickly, Peter wants to look at the Dow. I was going to look at that later, but why not now? Wall Street yesterday, S&P 500 first, because I always think this is much better, really. It's pulled back to break out support. 2873 and 2863 supportive, and you've seen that the market has now come back to that and started to find a low. Yesterday, bullish engulfing day before yesterday, bullish engulfing candle, positive stochastics crossover. Last time we saw 1, 2, 3 crossover buy signals have worked, 4 crossover buy signals have worked. So yeah, let's look out for that. Is that renewed buying pressure now coming through? Crossover buy signal. RSI holding up nicely in the mid 50s. So S&P 500 is strong. Dow, similar sort of story, sort of pulling back and finding a bit of a low, bouncing. Hasn't really taken off yet. Bit of a false start, I said in my analysis this morning. But again, I think if you get positive sort of news flow coming through over the trade dispute, I think we're going to see sort of rolling backwards to what I said at the beginning. What you're going to see is the dollar strength unwinding, and what you're going to see is US equities, I think, continuing higher. So the Dow, what you'd be looking out for is a closeout above 12,168, and that opens 12,616 is the all-time high. All-time high on S&P 500 has already been hit. So there is little real reason why you're not going to see that all-time hit if you again break out above 12,616. Okay, I was going to talk about the Bank of England and the ECB. Rate decisions are out. Well, Bank of England in 20 minutes, ECB a little bit after. I'm not expecting anything interesting from either of them, to be honest. Bank of England hiked interest rates last time out. It's not going to do anything. The swaps, interest rate swaps markets are sort of pricing in the next rate hike 12 months out. So you've got Brexit uncertainties, blah, 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 not looking good. You're going to get a unanimous decision to hold rates today. And I think it's going to be pretty dull from sterling, from FTSE 100, from the Bank of England and subsequently sterling. From the ECB, you might get a little bit more interest because I think the ECB today will be putting out its growth and inflation forecasts, and it's expected to slightly shave off some of the growth forecast from 2018 to maybe 2018, 2019. So that would be the interesting takeaway. You're not going to get too much else out of the ECB, I don't think, today. Draghi will basically fend off any questions surrounding the next or the rate hike that is expected to come through summer of 2019. So that's not going to be an interesting one. As Peter has said on the comments, the Turkish central bank decision could well be much more interesting, and I think it will be. So where are we sitting with Turkey at the moment? Well, it's fairly stable actually. It has been for the past sort of couple of weeks really, but I think today's decision, which is expected to be 300 basis points, maybe even 325 basis points higher on the Turkish interest rates. Now, that's a massive rate hike, and there's likely to be a significant amount of volatility around that. So that will be interesting if the central bank can start to stabilise and improve or strengthen the lira. Then does that again play into this whole dollar correction move? Does it have a positive contagion through emerging markets? I think probably near term, yes, it does. So that would be another sort of factor to play into how the dollar moves. But Turkish lira, yes, is going to be very volatile, I think, this afternoon. US inflation. Now, US inflation is interesting because US PPI yesterday missed expectations. However, obviously what we had on Friday was the fact that US inflation data, US average hourly earnings beat expectations. and actually ticked higher, 2.9%. Now, headline CPI is actually expected to fall to 2.8%, so we could see average hourly earnings back above CPI again, and that would be that would be sort of dollar positive, but I think the market's sort of priced for that. So I think it would be a surprise that affects the markets. And could we see a downside CPI surprise? Could that happen? Yeah, it may well do. I say dollar positive in the fact that it would be earnings. I mean, it's difficult to really. Let me just think about this, because what you've got is the fact that if you get inflation falling, average hourly earnings rising, then that's a positive for the economy. Certainly helps to strengthen the power of the consumer, or the consumer spending power. However, does it affect rate hike expectations? Marginally, you could argue. September is an absolute given. That's I think 26th of September. But December's up at sort of 20%. December's up at 80%, I think it is at the moment. So I don't think it's necessarily going to change December all that much if you get inflation that just drops a tick. So I think that what we have got is the likelihood that it would be dollar supportive to a degree. It would have to be a big downside surprise, I think, to really affect December expectations, which, as I said, are following on from the average hourly earnings, and now I think up around 80% probability on, certainly on CME Fed Watch. Now, what we've still got, I sort of talked last time out about euro sterling being potential opportunity. I still think that potential opportunity is there. I said about selling euro sterling around 89.50. Well, it got to 80. Was it 89.50? 89.40 on my selling euro sterling. 89.40, and we sort of just missed that yesterday and today. It still looks like it's sort of, I think, tracking lower euro sterling. I think there's still some move to run in that. I'm still a fan of sterling generally on a near-term basis, and I think that any sort of weakness in sterling, I think, is a chance to buy, because it seems as though that, as I said, that the mood music out of the ECB has out of the EU has changed with regards to Brexit. It seems as though they're more amenable towards the deal. And I think that subsequently any sort of weakness is going to be bought into. 28 figure is clearly key support on cable. 29 comes in as another near-term level to watch. But anything, I think, between 29 and 30 big figure, I think, is a buying opportunity on sterling. Sterling dollar. And here we see the hourly chart where you've got 30 big figure now is a basis of support today as the market sort of picks up again. Strong momentum on the hourly chart. I think it's looking good. So any weakness from maybe the Bank of England, I think chance to buy. So that is where we're at on the couple of trades that I've still got that could be filled, that haven't yet been filled. I've talked here actually a sell on silver if the gold rally fails. Now that would be interesting, because what you do have on silver is this ongoing sort of stepped decline, certainly in recent months. And whilst gold has started to recover, silver hasn't yet. And the fact that silver is sort of underperforming, I suppose you could argue, in the gold rally. If that gold rally fails, silver is set up perfectly to be a selling opportunity. So that's one thing I'd be looking out for, is the possibility for the silver rally to really start, the silver bounce to be sold into if that gold rally fails. So that would be an interesting opportunity to maybe get more traction in that gold failure if it does happen. I'm not saying it will happen. I don't expect it to, and certainly the technicals on gold are starting to turn around. And as I said, if the dollar strength starts to wane, that will also play into a gold rally. However, as a little bit of a sort of a security blanket, we could say that if that gold rally fails, I think silver could come under pressure. And what you're seeing today is silver down sort of 0.5%, whereas gold is basically flat. So silver is still underperforming that gold rally. I think something to maybe think about. So, thank you very much for attending today. In terms of what we've got next week, I think I've got a media commitment on Tuesday. I think I have. So we're going to have to do Thursday next week, if that's okay. So I can't do Tuesday, but Thursday I think it's going to be the one that we do. So with that in mind, I wish you good luck in your trading, and I'll speak to you all again then.